Hey there, traders. Welcome back to the live trading and backtesting show with me, your host, Christopher Ewell, on the Benzinga channel. I am so excited to be here today. A lot has changed over the last week, and let's definitely get into that. Do me a favor, before we jump into the content of the episode, I want to know two things, and I want you to put them in the chat right now. What's your favorite stock of the week? And what's the stock that you just totally got murdered on this week, right? The one where you're like, oh, I can't believe I traded that. Because I think we all had a couple of those this week. At least I did. And I've seen a lot of it on social medias right now. So let's get right into the show. And we will be talking about those stocks and so much more on today's episode.
This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance, Christopher Ewell.
Hey there, traders. Welcome back to today's How to Trade Stocks and Options podcast. I have 3 special free gifts for you over at 10MinuteStockTrader.com. That's the Triple Stock Profits ebook you can get for free. That's a Bullish Power cheat sheet that you can get for free. And if that wasn't enough, at the brand new web class, How to Easily Discover Proven, Backtested, 100% plus winners, that is for free as well. You can get these 3 free gifts, all yours, at 10MinuteStockTrader.com. The Triple Stock Profits ebook, the free web class, and the Bullish Power cheat sheet. And all you got to do is go to 10MinuteStockTrader.com.
Markets are people. People are predictable. Outlier can show you how to track market fear and greed with artificial intelligence on over 1,300 of the largest market cap names. Visit outlier.com to learn more. That's OVTLYR.com. They have a free pilot program for the rest of 2021 so you can get access to right now at OVTLYR.com. That's OVTLYR.com.
Hey, make sure you subscribe and hit the bell so you'll be notified every time we give you more tools, tips, and tricks to help you trade faster and trade smarter every single week. Well, hey there, traders. All right. Well, like the intro said, my name is Christopher Ewell. My website is 10MinuteStockTrader.com. And I always like to give a brief intro. Where that came from was when I was learning how to trade. I couldn't do it during the day on my work computer. So I bought an iPad and I pulled it out from my backpack every day. And I would just trade on the iPad. And I only had about 10 minutes a day. So it took a lot of time and effort and skills and training and heartaches and headaches and everything else. But I got my systems down to where I could run a portfolio in about 10 minutes a day. And hopefully you can do the same and not be stuck looking at charts all day long. But I hope you are excited to be stuck looking at charts for the next half hour with me, because there is so much going on out there. And that is part of today's episode. Let me jump into the chat box here. Elite Trading, hey, thanks for joining. Easy Mike is here. Thanks for joining. James, thanks for joining. Easy Mike. Hey, Easy Mike. What's up? Igor Bogdanov is here. Amazon gave me everything back. Okay, as usual. Hey, man, I get it. I don't like to trade those big stocks because they can move so much, right? On a $3,000 stock, there's a lot of movement that could happen on just a regular basis. Yeah, but we can cover that today. Like I said, go in the chat right now. Drop in your favorite stock of the week and also the stock that took your lunch money. And we'll look at some of those and backtest them as well. But up first, let's take a look at the market. And let me click the right button here. I think it's this one. It's that one. There we go. So looking at the market, right? I was just talking to Money Mitch about this. At some point in time, you've got to realize when the market is moving so bullishly, so fast, that there's a chance that it might just up and turn around just as fast. And that's what we're seeing here. Am I saying that this is going to continue on forever? No. But I'm just reading the charts, right? I'm not a perma bear or perma bull or perma anything. And I don't want you to be either. I want you to be smart and see what this is telling you, right? Because at the end of the day, all this is doing is taking a picture of the price of the stock or the ETF or anything else at this moment. And then we're just drawing that and how it's changed over time. Okay. So while this has had a monster run, I think there is a chance that we may see all of that gains come back, right? Talking about this earlier, the last time that we had our sell-off here, it took us about, what was it? It was like 30 something days, 45 days to build it up on this left side. And then it took us 12 days to build it up on this right side. So it went up 3 times as fast the second time as it did the first time. That's a little nerve-wracking. And then it kept going, right? But on the back end of it, we can look at the MMFI. Now, the MMFI is one of those indicators that I like to use. It really is a line in the sand to me that says what percentage of stocks are above their 50-day or below their 50-day moving averages. And this had a huge breakout. You know, previously I've talked in the past about, here, I want to draw. I can't draw on this chart. I have to draw using my drawing tool, which is on the other screen. There it is. Previously, I talked about how we have been looking at this down trend line for so long, and now we just broke that. We broke that bad boy apart, right? We're going back up. Moon, ready, right? Get your rocket ships emojis all set to go on your social media. But then it's like we hit a wall, and a big wall, right? And if you were an investor in Tesla, you saw Elon's tweets last weekend, and you're like, oh, you've got to be kidding, right? And now, you know, Tesla's lost how much of its value? Let's say you bought at the top. It's down 20.5%. That hurts. I had somebody asking me last week, hey, should I buy Tesla? And I'm like, no. That's long before Elon decided to go crazy on Twitter. But, you know, you've got to be aware, right? When something gets extended, when it feels blow-offy, as they say, you've got to start playing a little bit more aggressive on your risk management. The way that I do this and decide if something is overbought is I use what's called a Keltner channel. So that's this green line that's hovering above the price here. You can think of it like a Bollinger Band, but in this case, this is taking 2 average true ranges above the 20-day exponential moving average. Lots of big words, right? But really, at the end of the day, it's trying to just give you a gauge of, hey, is this extended from like a normal move? Or is this going somewhat normally, right? Is it growing but not too fast? Right? Is it setting something on the stove so it gets warmer, or is it setting it on a stove and it's boiling over everywhere? That's the difference in there, right? And that's why I like to look at it. Now, with that being said, I usually like to go to what's in my portfolio this week, but right now I'm in all cash. And so I'm going to talk about what I did this week and kind of give you a lesson on how I traded it. So if you haven't already in the chat, do me a favor, put in your favorite stocks that you're looking at. We've had some good interaction up in here. Let's continue to throw that in. And if you don't mind, please destroy the like button with all intensity and fury. Hope I just woke you up. That lets Benzinga and YouTube know that you are enjoying this kind of content, and it gets it out to more people so that they can learn to trade like this as well. So with that being said, let's take a look. So this week I traded 2 names. I was telling Money Match beforehand, I'm a swing trader. I don't like being labeled that. I like to take opportunities where they come, right? And for me, I only saw 2 this week.
It's okay. I understand that one, Chris. I don't like to be labeled as a swinger either.
Don't label me. Don't label me, Mom. I'll do what I want. There were 2 trades I had this week. One of them is HPQ, and the other, it was MAR. I'm out of both of these, but both of them have 2 different stories, okay? So HPQ, I ran a back test and found that the 5-day exponential moving average, I put my money where my mouth is, people. This is actually how I trade. Was the best. I really only look at the 5 and the 10-day. I don't like to just like MACD this and stochastic that. They may work and they may work great for you, but for me, I like to keep it simple. I like to look at moving averages. The 5-day showed to be having a higher result than the 10-day. In fact, hang on, I don't want to do that. TrendSpider's got a little glitch right now where when I run the back tests, and we'll see it later, it doesn't keep it on the trade. In fact, I'll do it real quick so you know what I'm talking about, right? So if we just look at a 10-day, just EMA on Tesla real quick, totally on a tangent. Oh, it's because it's going down. Anyway, it's plotting them on the chart for you, which is great. But then as soon as you close Strategy Tester, it deletes it all. And I don't want to delete this because it's going to help me make my point. Okay, so the 5-day is where I got in, or not where I got in, but when I was doing the back test and I saw, hey, HPQ, that hit all my scanners, right? That hit all my trade setups. It is currently moving up, which we want to see. It's currently below the Keltner channel where I got in. I mean, I got in like at it. And I was like, all right, here's where it's going to be. I'm going to follow the 5-day. The way the mentality that I have is, and I learned this in the Trend Following book, which if you don't have this by Michael Covell, go get it. I think he's on his 6th version of that. I'm not being weird, right? Actually, I prefer the one that came out in 2016. This one, because I actually own it twice. I think this one is a little bit easier to read than the newer version. So if you don't have this one already, go and get it. I'm going to double check that this is the year that this one came out. 2004. I was way off. This is the 2004 version. Go get this one. This is like the textbook for trading to me. In there, he talks about how when you get in a stock, it may be going from 5 to 100. You don't know. You can't know. But you do want to get in when it's going up. And you can actually get in anywhere in between the 5 and the 100, as long as you set your risk correctly. So I did not get in when the 5-day and the price crossed over, right? That was way back here. If I had seen it at that point, it would have been a great trade, even better. But I got in, like I said, if it's going from 5 to 100, I got in at like 47. But I knew my risk, which is so key when you're trading, was the 5-day exponential moving average, which to me was at initiation of this trade, 52 cents. That's how much room I was giving it. And I just followed it. And if it had closed above one of these trades and not been over its Keltner channel, meaning that it's overbought, I would have bought more here. I did not buy more here because it was over its Keltner channel. Now, today, it closed below its 5-day. So you know what I did? I entered my order to close. I took my profits, and now I'm talking to you because I only closed it like half an hour ago. And I'm okay with it. And it was a great trade, especially with the market like puking. This one actually held up really strong. Now, on the flip side of that was MAR, Marriott International. Now, these two lines here, like I was saying earlier, the glitch that's going on in TrendSpider, and I've already talked to them about that. They're great guys over at great guys and ladies, great people over at TrendSpider. And when I explained to them my situation, that I couldn't keep it on the trade, they're like, okay, we're going to fix this, but we don't know how long it's going to be. So I went in and I drew on my own lines on there to say, okay, this is what the back test would show, right? That blue cloud on here. Basically, you could look at it that way. So I got in November 8th. Now, keep in mind, nobody knows the future, right? So we're basically looking at it at the far right-hand side. And we're saying, okay, I back tested this on the 5-day. This looks strong. I like it. The very next day, it went down. And I got out. And it got below its 5-day exponential moving average. And I got out. And it's like, oh, goodbye. Because I know my risk management, which is such a key point. So many people get bogged down on the signals. Oh, what's my signal to get in? Without realizing that they have to have proper risk management in place. Because if I had put my entire account into this, let's say I bought out of the money long calls, and it went down like this, I'd be done. I'd be toast. I'd have nothing. But the risk management is so key. And I wish more people talked about that. Because you're going to be wrong. That's part of trading. If you're looking for a perfect trading system, there ain't one. But there are some tools and tips and tricks, that's what I like to say, that can help you out there, right? One of them, watching the MMFI. Only going long when MMFI is over 50. Only going short when MMFI is below 50. I backtested this and it increased my win rate from my actual win rate to what it could have been by 13 percentage points. I was like, daggum. That's a big difference. I'm going to keep that. I don't say that ironically. That's how we talk in Texas. If you're finding this useful, please do me a favor and smash the like button. Smash it like Hulk smash. But there's another tool that I use, and it does have a free trial, and I did want to mention it. It's called FinClub.ai. What's really cool about FinClub is it gives you this big red light, green light situation up at the top of its member platform. And over the last couple weeks, there's been one day, which was the day when I got in these stocks, where it's been a green light. And to me, I mean, look at this. The last green light they had was the 27th, and then it's been red lights, and then the 8th. Other than that, it's been red lights. They're basically saying, look, we see, based on the artificial intelligence data that they have access to, that you can access by just checking out FinClub, the market is overbought. It may be rocket shipping. It may have everybody on Twitter with their rocket emojis. But the risk profile on that was not good. And because of that, they were failing every day. I actually emailed the guys. I'm like, something broken? We're going up every day and you're failing everything. What's going on? They're like, listen, watch. Watch. Now, I'm not saying it's going to go down for a while. FinClub's not saying this either. But they are giving you an insight as to where things are and where they're going to be going in the next couple of days. And this is why I am a huge, huge advocate for this, because you can really find some great information by reading between the lines on this. So with that being said, if you haven't in the chat has kind of slowed down. What are you guys doing? Blow that thing up. Tell me what's your favorite stock right now. And smash like. We're going to backtest these guys. And we can talk about, what's working for you, what's not working for you. And if it doesn't work for you, it's okay. You just got to learn from it. And we got to move on. Let's do this. I would like to look at a couple new setups that I trolled the Twitters trying to find something that's worth talking about. So we'll talk about those for a couple minutes while you guys are dropping in your favorite stocks in the chat. Hey, before we get too much further, if you haven't already subscribed, head on over into your YouTube search bar that you've already got right there. Type in 10-Minute Stock Trader and come subscribe. Come hang out with us. We have over 10,000 subscribers. We have over 550 podcast episodes. I mean, we put out 3 new videos a week, and we'd love to check you out over there. So do me a favor, 10-Minute Stock Trader in your YouTube search bar, and you'll see me smiling back at you. So let's take a look at some of these, right? We talked about HPQ. We talked about MAR. AMD. I don't know what happened with AMD. But this is one of those times where you could talk about the whole 5 to 100 stair-stepping approach. Because let's say you were following the 5-day. And you can see on here, at some point, someone had, in the Benzinga chat, requested a back test. And look at how beautifully it performed with that and even outperformed it. That is the reason we do back testing, is to see what our expected move can look like. And gablow. That's what it does. Not every time. Past performance is not indicative of future results, but it does give you a roadmap. And you can tell when it's not working right on the roadmap, like this one, that you need to bail. So yeah, I don't know what's going on with AMD, but it had a crazy week. In fact, let's take a look at this. This is one of those where you could have got in at 105 all the way up to 150 as long as you kept your risk in check, right? You could have gone at 115, 120, 125, and we don't know what the future is going to be, but if you keep your risk in check, you can follow this, right? It's exactly what we talk about in the trend following books and exactly what we talk about on my podcast. And it makes life so much easier. You don't have to be perfect when you can just know, oh, I'm gonna risk 50 cents. I'm gonna risk $1. And then you position size appropriately, just let it go. Rivian. Now, this is one where it was the IPO today, and from the top to the bottom was 20% on that move. Could you imagine if you were one of these people who bought at the very top? Yeah. Pro tip. Don't trade an IPO for, I think it's 8 weeks or something like that. They talk about in William O'Neill's How to Make Money in Stocks, maybe even longer. You got to let that dude figure out which way it's going to go, because it could go straight down or it could go straight up. And the risk is not worth the reward if it goes straight down. Next is Tesla. Like I mentioned earlier, I had some people talking to me about, hey, should we trade Tesla? No. Go into your charts, add in Keltner channels, have that be two ATRs, two average true ranges above your 20-day exponential moving average, and that'll let you know, hey, this is looking overbought. I don't use RSI. I use this. This is more appropriate to me when it runs along the stock and you can actually see where it's going versus the RSI, or it's 70 or 80, something like that. The key here is just knowing where your risk is. And maybe even your risk is saying, okay, if it goes above the Keltner channel, I'm going to ride it until it comes back down below the Keltner channel. Maybe that's what you do. But you've got to find the way to control your risk. At the end of the day, that's the whole game we're playing here. It's just risk control. Upstart. Now, my friend, Mark Minervini, as the internet claimed, didn't even know what Upstart did. But actually, if you go over to my podcast, I talked to Mark about this particular stock 3 weeks ago. That was a fun conversation. So yeah, that one got murdered, down 18% today. But just follow your risk plan. That's all you got to do. And then I did want to mention a couple other things before we go into the audience requests. When you find a stock that's below its 200-day average, either prepare to short it or don't trade it. Because this was one that I found a lot on social medias yesterday. SDC, Smile Direct Club, down 23%. I mean, we're only talking like a $5 stock. But that's the other thing too, is if you size wrong on a $5 stock, if you buy 1,000 shares when you should have only bought 200, that 20% is going to hurt. And I don't want that to hurt for you. I want it to do well. So that's my pro tip right there, is if it's below its 200-day, just move on. Just find something else to trade. So let's do this. Let's go into the back tests. I see that we finally got some great suggestions in here. I will start at the top and I will do my very best to cover as many as I can. All right. Starting with here, DDS, stopped out by 1 penny. Hate when that happens. That's why I just wait till the end of the day. That's when I make my decisions. All right, strategy test. And we will only cover the 10-day exponential moving averages for the sake of simplicity. And I'm going to make this like a factory. We're going to churn these guys out. You ready? 96% cumulatively versus 466 for asset performance. Now, I had someone ask me about this the other day. Keep this in mind. We don't know what the future will hold, but we can control our strategy. This says that if you threw a dart 1,000 candles ago, you have got a return of 466%, which is fantastic, but you don't know what that's going to be. You do have full control of your strategy here. And this strategy in particular, just following above and below the 10-day exponential moving average, resulted in a 96% return. That's the number I focus on because that's the controllable number. Whereas the asset performance, if you want to think of it that way, is just the stock. Now, like I said earlier, if I hit the strategy tester, everything goes away. So that's just a glitch in TrendSpider. We'll get that fixed. Don't worry about that. Noah, thank you, sir. Hubs and Facebook. All right, Hubs. $296% on the 10-day. That's huge. Nice on that one. Facebook. Negative 27%. That's not what you would expect on Facebook. Wow. That's worth talking about, right? This stock, it may be one of those stock. It may be a FANG stock, right? If you can find the data and you can see exactly what's going on out there, that gives you more information. You're a much better informed trader now, right? Let's say you buy Facebook because you figure it always goes up, but now you've got the data that says, hey, you know what? Maybe running a 10-day is not the best. You can change this. You can alter this. You can maybe find something else to work with that does provide a better return. Following a 10-day on Facebook is surprisingly bad. Thanks for that. Chris, up 19% on good, down 49% on Peloton. Made more than I lost on share size, though, hysterically. I tell you, man, you got to control that risk. Peloton, I know, is one this week that a lot of people lost their lunch money on. Apparently, I was looking at it, too. Got my notes in here. Remove all annotations. But still, ironically, even though I got murdered this week, if you were following the 10-day, you would have been out before this big move down. And because of that, the backtest proved strong. Food for thought. So check that out. Easy Mike, thanks for that, man. Kevin, monitor the fib extensions on the web app. Way up. I don't look at Fibonacci extensions. I mean, that's getting into the realm of, I don't know. I like to see real data. I like to see moving averages. I like to see trends. Fibonacci's extensions, yeah, sure. They may work for you. And if they do, don't stop what you're doing. But for me, it's just not something that makes sense to use. Affirm. Oh, wow. This got smashed. Wow, this was one of those darlings not that long ago. How far did that fall? Hang on. Click. 23%. Whoa, that was unexpected. Yeah, this one, though, still has a 45% cumulative return following the 10-day. So, hey, Patrick, I think you may be onto something here. Vu and Do. How are you, sir? New. All right. This one, 149%, even outpaces its asset performance. That's a good one there. I remember I traded New not that long ago. It's in the utility sector, I believe. I could be wrong, but I remember trading it not that long ago. Nice one. Proton, 73. PLTR. Oh, man. Yeah, this is what I'm saying over and over. We've got a lot of breaking downs in the market. But still, 145% cumulative return following the 10-day, which is even better than just the stock. Nice one on that. Let's see. SoFi. I know that's a popular one. SoFi. Another one that got wrecked, right? But we did a back test in the past on it. You can see it's still there. And it followed that back test really well until today when it got wrecked. Still, cumulative 22.9%. Can't complain about 22%, right? As long as you're approaching your risk correctly. I'm running out of time, so I'm going to have to do my best here to wrap it up. Let's see. What's the name of the book? Trend Following by Michael Covell. Go get the 2004 edition. All right, last one of the day. INTC. Ooh, negative 29%. Not what I would expect. So yeah, negative 29% on INTC. Jim, thank you so much for that. You know what, guys? I'm running out of time. Money Mitch has sent me 2 dirty messages saying, get the show on the road, Chris. Hey, if you found this useful, smash the like button for me and Benzinga to let them know that you value this kind of content. And then, while you're smashing the like button, type in your search bar, 10-minute stock trader. Come join us over there. We have new episodes 3 days a week, and I'd love to see you over there. But yeah, I got to head out of here because Mitch is he's about to cut off the stream. So hey, guys, thank you so much for tuning in to today's episode. I'll see you the next time.
Okay, so what'd you think? That was pretty incredible, right?
I have 3 special free gifts for you over at 10minutestocktrader.com. That's the Triple Stock Profits ebook you can get for free. That's a Bullish Power cheat sheet that you can get for free. And if that wasn't enough, at the brand new web class, How to Easily Discover Proven, Backtested, 100% plus winners, that is for free as well. You can get these 3 free gifts, all yours, at 10minutestocktrader.com. The Triple Stock Profits ebook, the free web class, and the Bullish Power cheat sheet. And all you got to do is go to 10minutestocktrader.com.
Hey, if you like this video, let me know by leaving me a like below, and then subscribe and share it with somebody you think could use it as well. Be sure to comment below with your biggest takeaway from this episode and any suggestions you have for future episodes. And finally, make sure you watch these other videos to help you trade faster and trade smarter, and I'll see you on the next episode.